Stock Talk. This is your host, Scott. I hope you had a good day. Maybe you had an opportunity to buy something today. This market was a record down day. Uh, no fun. This downturn is no fun. But again, it's time to buy. And we've been buying pretty much ever since it's turned. And we'll continue to do that. We don't want to use all our cash. That's the thing we've got to be careful about. And But I do want to go over some of the trades. I do apologize not being on here the last few nights. I've had the flu. At least I hope that's all it was. The doctor did say it was the flu, but I'm just about getting over the hump now. So if I sound a little hoarse, it might be because I've been coughing a lot, but just bear with me. I did want to touch base with you tonight and talk to you about what I've done since last Wednesday. Last Wednesday, we did purchase, let's see here, it was MPC. We added to that, cost averaging on the MPC. We also, today, we didn't buy anything Thursday or Friday. We did sell some SPY last week. I think that was on Wednesday or so. But we'd already talked about that. But today we bought SPY again. We bought it on the open, the very first of the first when the market opened today. Of course, if you were watching it, it did halt shortly after it opened, but I was able to get that SPY. I was trying to get DIA as well, but was not able to do that. So we're gonna look at those ETFs a little bit more tonight, so you'll have a good idea what those are, why we buy those when the market dips, okay, and how similar they are. It's just a matter of preference, but they do vary a little bit, just enough to where sometimes maybe you're green on one, you're not green on the other. So we want to look at that and look at the insides of those ETFs, so you can kind of get an understanding of what's in those. So let's go ahead and take a look at our portfolio. Let's jump over there and take a look at that. We are here. We got SPY, like I said. I bought that today at 275. I think it was 275, and so we're down a little bit on that, but I think we're up in post market here. We'll look at that in a minute as well. But SPY we got today. GBTC, all these just terrible days based off of the market. The best ones that held up best today was EXAS. If you call 2% down in a day, holding up. The rest of them, just 6 and 7%, 8%. We're not in good positions on any of that right now. The closest thing we're sitting close to being able to sell is going to be this QQQ and the SPY that we're holding. The other ones are way in the dirt based on the amount of fall we've had, and that's just what happens. We know that's what happens. So what we do is we just hang on to them, and we may have them for a year, we may have them for 6 months. It's just waiting for that time to roll around. This is going to pass. This market will go back up. We just don't know how long it's going to take, but we're getting very close to a bottom, I think, and I'll show you why on that as well here in a minute. But let's go ahead and take a look. I want to dive into some of this ETF stuff so you can take a look and see what's going on with that. Okay, so let me switch back over there to that. Let's just take a look at SPY first, since we've got it up right here. We'll go ahead and pull that one up. SPY, yeah, you can see we're up in after hours here. It looks like a pretty good up. We bought it at what, 275 we said, so now we're up $5 a share on it. But so we're going to take a look at this. You can see here, this is where you go to look at what's inside the ETF. So let's pull that up and take a look. This is the insides of the ETF here, and it tells you the sector weightings. You can see here the different sectors. It looks like the majority of this is in technology. Then you got a pretty good size in healthcare and then financial services. But you can see it there, the weightings. But if you scroll down, you can actually see the top 10 holdings in the asset. You can see these top 10s, 23%, 24% of the asset. So here they are. You can see the top ones here: Microsoft, Apple, and Amazon, Facebook. These are all going to be familiar. You're going to see them as we check out some of these other ones as well. Okay, so let's go back. Let's take a look at our QQQ. And the reason, we want to buy these instead of a single stock is because, you're trusting that the market's going up. You don't have to trust in a single stock. You don't have to trust, something might go wrong with that stock. These are several different stocks, and you can see these are good blue chip stocks, a lot of them. So you're not buying junk here. That's why it's $274 a share. So let's go ahead and go back that to our ETF a little bit further. QQQ. Now this is supposed to reflect the NASDAQ, but let me go ahead and pull this up a little bit for you. Holdings. You can see here. Notice the holdings here. Technology, which is where most of your NASDAQ stocks are. Your technology stocks are in the NASDAQ. 43%, and then 21% communication services. I believe that's going to be like some of your internet stocks and some other things. I think like Facebook and Twitter. They kind of changed that up recently, so I'm not positive on that, but they're technology stocks, pretty much. I think they took them out of technology because they were just too much weighted there. So anyway, you can see what they've got here, the consumer cyclicals as well. That's the weights there. And you go over here, notice the top holdings here, top 10. You got Apple, you got Microsoft, Amazon, Facebook, Google's. Looks kind of familiar, doesn't it, from the last one. Got the other one I want us to take a look at that I trade, VTI. Let's go ahead and pull that one up. We've got that one. We're holding that one as well. Holdings on that. Let's see here. This is the Vanguard Total Stock Market Index Fund. So it's supposed to reflect the whole market. And you can see it's kind of more distributed, spread out just a little bit more, it looks like. But you've got the same ones: technology, communication services, financial services, which took a big hit today. Healthcare, all of them are in here. Okay. Go back here, look at your stocks. There's your weights, and you can see it's pretty well same ones at the top. But you can see that this is only 19% of the holdings. Okay, and so spread it out a little bit more, I think, in this one. So that's kind of why I like that one probably better than any of them. All right, let's see. Let's go DIA. I tried to get that one today. This is supposed to reflect the Dow. But I want you to notice this one. Let's go ahead and pull that one up. I didn't get it today. I would like to get this one. Probably try for it again tomorrow, maybe. Well, maybe not tomorrow since everything's going up. So here's how its breakdown. It's got a weight on it here. It's got the weights, financial services, industrial, so a little bit different than the other ones. If you go look at the stocks here, this is the top 10 holdings. It's half the holdings. Boeing, of course, we know all about Boeing. It's been having all the trouble with the plane, and that one's been down for a while, but you can see here the companies that make that up. All blue chips, so that's why we like to buy these, because if the market's going to go up, and you got a feeling the market's going to go up, then you want to buy one of these type of ETFs like this. They're just a good way to do things as well. So let's go ahead and I want to do one more thing here. I want us to take a look at the Dow and see where it's at compared to where it was back in December of 2018 when we had our last pullback. We feel like this is really bad, but with that pullback, we actually got down to a lower point because we weren't at the highs we were at either. But let's go back to that and let me show you that real quick. And we'll pull that up for us. Here we go. Okay, so the Dow, I'm going to pull the chart up for us. Let me do this where you can see the whole chart. So let's get this chart up. I got a 2-year chart up, and here's where we're at today. This is today's. And let me just tell you this about, these are called candlesticks. You see I've got it set for candles. These are called candlesticks. When you see a green one like this, let me kind of explain. The green bottom part right here, that's where that stop for that interval, whatever you got your interval set at, this is a 1 week interval. So that's where that stop would have started at for that week. And at the top of it would be the end, the top of the green part would be the end of that week. That's where it closed, okay? Now, what these are called wicks, these on both ends, these are called wicks, and that's the price movement, the low and the high, okay? Now, on a red candlestick, of course, it's going to be the opposite. You're going to see, all right, you're going to see it opened up here at the top, and the close is down here at the bottom, okay? So the opens at the top, let me get a bigger one here. Opens at the top right here, you see it right here, and the close for that week would be down at the bottom here. The wicks are still the same. That's the highs and the lows. So this is what you call a candlestick pattern, and you can see they kind of, you can tell when something's on a good run. This is a good run. This is consolidation, and it runs again, and then this is where you have your downfall, okay? And normally what you'll see on these big downfalls is a pickup in volume. See the pickup in volume here, all right, down at the bottom here, all right? But that's just a little bit about candlesticks, but I wanted you to see this is where we're at today. We closed at the 23,851, okay? Go all the way over here. Let's see if this might be it right here. If you'll notice, the date does come up right there. You see it's down here, right here. 2/24/18. So that's what I'm looking for. All right, so the downfall actually ended on the 17th pretty much. And you can see the downfall, the low, if you look up here in this area here, the low was 22,396. And the next day is when it started to make its climb, okay, the next week. So let's look at that again. Those numbers, the low was 22,396, okay? But we actually hit a low here the next day before we started to turn. At some point, we got down as low as 21,712. So that's going to be a number that people will be quoting. If you hear them talk on the TV, the last low of 21,712. So a lot of times we do revisit those lows. So it could go down as low, that much lower. So we may not be done yet, but look for it to start to settle down here pretty soon. We're going to have some news tomorrow that's going to help turn some stuff around for a little bit. We don't know how long that's going to last, but we'll talk about that in just a second. But I wanted to show you that because that would be a support level. You see, this would have been a possible support level. We blew right through that, and this one, these two, we already blew through those previous days. Okay, so that's when you blow through them like this too, you can almost count on going to the next one at least. Okay, so we may still be going down this low before we turn around, but that's where we are. We're looking for some support. That's the next level. Hopefully we don't have to go all the way down that far. We don't always do that. Like, last year they thought they were going to retest it in this area, but they didn't do it. And then, they start thinking the same thing here. And you see, they didn't retest the last one. This is higher highs and higher lows. And as long as you got higher highs and higher lows going on, you're on the uptrend. So that's a good deal. All right, so that's what we're hoping for tomorrow is to see a change in some things. It's been a rough go here, but again, perfect opportunity to buy things. That's why you always keep cash. Keep cash on the side. I had a friend of mine text me today and said he's never owned a stock before, and you know, would it be a good time to get in now? And of course, my answer is it would be a good time. It would have been a good time. Today is a good time, but much better than 3 weeks ago, right? So much better than a week ago. But is it the time to get in? I can't tell anybody that. I cannot pick the bottoms and cannot pick the top. I don't know anybody that can. So, but it is a much better time to be getting in right now than it was 3 weeks ago, because this thing was at a record high, and you want to buy low, sell high. And it's for stock, it's for the market, it's for everything. Now we've been buying, we bought some of these stocks, we're down 15% on right now because we bought them when it first started dropping, because you never know when it's going to stop. So you nibble at the stuff and you buy it in lots. You buy some of those shares this week. You see how next week goes, and you might want to buy some the next week, especially when it drops a bunch in a week. That's when you really want to make sure you try to buy something. And so we did that today. We had to buy something today. And, I'd like to keep some cash on the sideline. I'd like to be cashing some of this stuff in. But when it drops as big as it did today, you got to go for it. You got to do the opposite of what the crowd's doing. So, and that's what we did. We bought some SPY. We tried for some others, but we didn't get it. But tomorrow we may be unloading that SPY, which would be fantastic because it's Tuesday, and that means we would already made our goal for the week, which is to make a buy and a trade. We want to make a trade by Wednesday every week and make some money. 3% is not bad. We went over that last episode as well. So, but back to when's a good time to get in? There's another video we got on here. It's called "It's All Relative." You got to kind of just think about that. It's just all this is a point in time. Where we were 3 weeks ago is a point in time. A year from that 3-week period, we may be up 20% from that point, or 2 years from there, or 5 years. You could be up 20% from that point. So when's a good time to get in? It's always a good time to get in, but I wouldn't get in heavy when the market's up as high as it was. I always try to buy on a dip, anything, stocks, the market, anything. So hope that helps, and I appreciate you watching the video. Again, I'm sorry I wasn't on here earlier. Had the flu, and we just pray it's not anything other than the flu. They said the flu, so I'm gonna go with that. And but I'm feeling much better, and hopefully we'll have a good day tomorrow. Let me show us. Let's take a look at the markets for tomorrow real quick, and we'll close out here. Okay, we got Nikkei is coming up here, and it's down 3%. Looks like. So Shanghai's not up yet. So it looks like they may be having a little rough day tomorrow. Today, in Asia. We did, so they probably will too. Oil, let's take a look at US though. Just take a look at that. 2,000 points in a day. That's something else right there. That is something else. 7% now. Back in '87, the Dow dropped about, I think it was 20-something% a day. But it wasn't this many points, okay? But this is a record as far as the point numbers. The percentage in a day is bigger. But anyway, that's that. The oil, this was another big story today. It plunged 24%. Now looks like it might be rebounding a little bit, but it was down 24%. it wasn't all about the virus today. It was about the oil and Russia not agreeing to the OPEC deal. And I think Russia's out to get us and our oil folks. So we may have a little battle going on with them in the coming months. We'll see how that goes. They've tried to do this with our shale producers before. OPEC's tried it and kind of backfired on them. So maybe same thing that happened with Russia. That was a couple of years ago. All right. Pre-market. This is what we want to take a look at here. Oil's up, so pre-market should be up, and it is. 347 points right now. We're going to have some news tomorrow about these payroll tax cuts and some other relief that Trump was talking about this afternoon. So that's what's got everything up right now. Is some relief is coming, and you know that's going to happen at some point. The Feds is kind of out of the picture right now, I think, because they don't have much room to help anyway. They didn't help the other day when they did anything. So this hopefully will, whatever they come up with on that is going to be good for everything tomorrow. Let's hope so. But it's about time for us to slow this thing down anyway. You know, let's get it slowed down and start turning it back up. Of course, this virus thing could keep going. We don't know how long that's going to go, but it looks like that is turning a little bit better in China and everything. Of course, you can't trust anything that's coming out of China, but some other places it seems like it's maybe leveled off a little bit. So, and there's the testing's supposed to be getting increased here in the next few days, so that's going to help with the numbers too here in the United States. Now, you know, as the cases go up, you know, we're going to have more cases, but the death rate, as far as that goes, will be going down. Everything I've seen, it's like 80%. You know, the people that get it get well pretty soon after getting it, and then you know, you get 20% or so that get sick, and you got I forget what the percentage on the death is now, but you know, it's no worse than the flu right now, based on everything I've seen. So, but it's going to affect the markets. It is affecting the markets, and it's not going to be a good first half of the year, I don't believe, because of all this. We may recoup some by the second half, but that's okay. We've got time. We're not out. As long as you keep, you know, if you have a strategy like mine, you can still make money every week. Even though your portfolio is going down, you can still pocket that money. And that's what really counts, because that other stuff's going to go back up one day. So as long as you're pocketing money, that's a good thing. And don't worry about them other ones that you bought and they've gone down. Just if you know they're good stocks and you bought them for a reason, just hang on to them, and they'll be all right. Okay. All right. Well, thank you for joining. Please like the video. Please subscribe if you haven't done so already, and tell your friends about it. And other than that, let's just see you tomorrow, and have a good day. Thanks. Bye.
To subscribe, click the button in the right-hand corner. Thank you.